Alex Karp, the chief executive officer of the defense software company Palantir, has become known for his ability to respond to criticism with a calm and composed manner. Back in April, during an interview at the Hill and Valley Forum in Washington, D.C., a protester began shouting at him from the balcony. Rather than react aggressively, Karp acknowledged her right to voice her opinion, showing a level of patience that stood out in the moment. However, this week, after Palantir delivered outstanding earnings results, Karp took the opportunity not only to celebrate his company's remarkable success, but also to address some of his critics in a confident and direct way. Palantir, headquartered in Denver, reached a major milestone by generating more than $1 billion in quarterly revenue for the first time in its history. These results far surpassed analyst expectations, delivering growth that left even optimistic forecasts in the dust. The company's stock price shot up to over $160 per share, representing an impressive 555% increase compared to the same period last year. By the close of trading on Tuesday, Palantir's market capitalization had grown to nearly $409 billion, making it the 23rd most valuable company in the world. This placed it just behind Johnson & Johnson, a much larger company that earns over 23 times more in revenue and employs more than 35 times as many people as Palantir. During Monday's earnings call, Karp, who holds a doctorate in neoclassical social theory, expressed immense pride in the company's results. Although he mentioned that some had advised him to be modest, he said there was no genuine way to hide his appreciation for what the team had accomplished. He concluded the call with a direct comment to retail investors, encouraging them to ignore analysts who had consistently underestimated the company's performance and saying that those critics were struggling to accept Palantir's success. Palantir has long been the subject of both political and financial controversy. Politically, the company has been tied to sensitive government projects, such as contracts with immigration and customs enforcement and the Israeli military, which have fueled heated public debate. Financially, some investors question how a company with smaller revenue and profit compared to industry giants could reach such a high valuation. Palantir's rise has been anything but straightforward, with years marked by legal disputes, public protests, and a unique company culture. Employees sometimes refer to themselves as hobbits, inspired by the fantasy themes in the company's name and internal culture. More recently, the company has ridden the momentum of generative artificial intelligence, which has become a major driver of interest and growth. Evan Loomis, a venture capitalist and a close associate of Palantir co-founder Joe Lonsdale, explained that Palantir has refined its sales approach and made its technology essential for large multinational companies. This ability to create strong, lasting relationships with big clients has helped the company cement its position in the market. Even though the stock is one of the best performers in the Standard & Poor's 500 index, it remains known for volatility and is often influenced by retail investor sentiment. Analysts who study the company closely tend to look at near-term performance indicators such as sales growth, cash flow, profit margins, and customer retention rates, and they note that Palantir trades at a premium compared to standard valuation measures. One long-term measure that Karp emphasizes repeatedly is the Rule of 40. This metric combines a company's year-over-year revenue growth rate with its adjusted operating margin. If the total exceeds 40%, it suggests the company is growing sustainably without sacrificing profitability. In the most recent quarter, Palantir's Rule of 40 score came in at 94%, a level that analysts describe as extraordinary because it shows rapid expansion alongside strong profits. Much of Palantir's success has been fueled by securing high-value government contracts. Since its founding, Palantir has worked closely with government agencies, with its first client being the Central Intelligence Agency. Even today, most of the company's business still comes from government deals. In July, Palantir signed a 10-year agreement with the United States Army worth up to $10 billion. This was not only the largest contract in the company's history, but also one of the biggest software deals ever signed by the Department of Defense. This accomplishment was particularly notable because nearly a decade ago, Palantir had successfully sued the department for excluding companies like theirs from its procurement process. Future opportunities could be even larger. A proposed law called the Forged Act aims to simplify the Department of Defense's procurement process by removing hundreds of outdated statutes, making it easier for technology companies to sell to the government. This could significantly reduce the long-standing advantage enjoyed by major defense contractors like Boeing, Lockheed Martin, RTX, and Northrop Grumman. Even as the Department of Defense has trimmed its budget, Palantir has continued continued to find growth opportunities. Only months after the department announced cuts exceeding $5.1 billion in contracts with consulting firms such as Accenture and Deloitte, both of those companies formed strategic partnerships with Palantir to deliver technology solutions to government clients. However, the fastest growing part of Palantir's business over the past year has been its commercial segment. Last quarter, commercial revenue jumped 93% year over year, driven almost entirely by the success of the company's artificial intelligence platform, launched in 2023. While many companies have focused on creating large language models, Palantir has concentrated on helping customers apply these tools in practical ways that deliver measurable results. CARP provided specific examples on the latest earnings call. Citibank has reduced customer onboarding and security verification from 9 days to only seconds. Fannie Mae can now detect mortgage fraud in seconds instead of 2 months. Lear Corporation is using Palantir's platform to manage risks related to tariffs. The connection between the launch of this artificial intelligence platform and the steady increase in Palantir's stock price has been clear. Despite the momentum, generative artificial intelligence is still a young technology, and many industries have yet to fully understand how it will transform workflows. Interestingly, while CARP has said he believes Palantir can grow revenue while reducing its workforce by 500 positions, the company has actually added around 200 employees since 2023. Palantir's work has also made it a target for activism. Protests have taken place in New York City, Palo Alto, Denver, Seattle, and Los Angeles, with demonstrators criticizing the company's government contracts, particularly with immigration and customs enforcement. Allegations have also been raised about Palantir's involvement in Israeli military operations. While some reports suggest the company provides predictive policing technology and core defense infrastructure, Palantir has denied supplying technology used for missile targeting in Gaza. CARP has defended the company's actions, saying Palantir supports national security and values. He and Nicholas Zamiske, the head of corporate affairs, co-authored a book earlier this year that criticized Silicon Valley for focusing too heavily on consumer apps instead of working with the government to protect freedom and democracy. Some former employees have voiced objections, particularly over the company's work during the Trump administration. In May, 13 former staff members signed an open letter expressing their concerns. Palantir responded by emphasizing its culture of open dialogue and noting that the group represented a very small portion of its workforce. Since the invasion of Ukraine by Russia in 2022, defense technology has become one of the most sought-after sectors in Silicon Valley. Companies like Anduril have reached valuations exceeding $30 billion in private markets. Major technology firms that previously avoided defense contracts, including Google, have now entered the field. Palantir and SpaceX are often credited with helping to lead this change. The company's history also reflects a willingness to go against the grain. Early on, Palantir was rejected by leading venture capital firms, prompting co-founder Peter Thiel to invest heavily himself and seek funding from former government officials and the Central Intelligence Agency's venture capital arm. Today, with Vice President J.D. Vance in a defense-friendly administration, Palantir enjoys strong political connections. CARP regularly writes shareholder letters in English, German, and French, sharing his thoughts on the company's role in national and global affairs. In his most recent letter, he argued that the United States must not dilute its values to match global tastes and criticized leaders who lack conviction. For now, both CARP and Palantir appear to be proving their critics wrong through a combination of strong business results, influential government ties, and rapid technological innovation. Essentially, Palantir has reached a historic milestone by surpassing $1 billion in quarterly revenue for the first time, driving its stock price up over 555% year over year to more than $160 per share and boosting its market value to nearly $409 billion. The company's growth is being fueled by major government contracts, including a 10-year deal worth up to $10 billion with the United States Army, as well as a surge in commercial revenue that jumped 93% year over year thanks to its artificial intelligence platform launched in 2023. Despite ongoing protests, political debates, and skepticism about its high valuation, Palantir continues to attract both government and commercial clients, positioning itself as one of the most valuable and fastest-growing technology companies in the world. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.